Good morning. Welcome back to another financial update for you. Today is it Wednesday? It's Tuesday. It's Wednesday, the 26th. It is 6:01 a.m. and I am caffeinated. And folks, I wanted to jump in with a little bit of a different way of starting today. I saw this video yesterday by Lynette Zhang. Now, I'm pretty much just going to play the beginning of it. If you don't follow Lynette, I recommend you do. Her channel is called ITM Trading. It's got about 100,000 subscribers. But essentially, she's been talking about the global reset. If you want to call it NESARA, if you want to call it GESARA, she doesn't use those terms. She just knows a reset is coming. She doesn't know if it's going to be good or bad. If anything, she's probably leaning towards it being bad. And yesterday she basically said it's going to start this week. It's going to start today or tomorrow with the announcement that's going to come from Jerome Powell today from the Federal Reserve. I want to just play this video. If you guys don't follow her, I recommend you do. She is not a crypto person. She is a gold and silver person, physical assets only, that you hold in your hands. Hang on, here we go. It's coming. Just throw a like on that video.
I am really, really sorry to tell you that the day that I've been looking for is arriving this week. On Thursday, Fed Chair Powell is expected to announce
So the video, it's tomorrow, not today.
a monetary regime shift. Something that happened back in 1913 and again in 1971.
Now, what happened in 1913? Do you remember? I'll tell you. The Federal Reserve took over and got control of America's monetary policy, something that Andrew Jackson had prevented almost 100 years prior. They finally won. In 1971, Nixon took us off the gold standard and put us onto the petrodollar and fiat currency.
It may not feel like anything has changed, but I'm telling you, everything is about to change. And now more than ever, you need to protect yourself. Coming up.
Yeah, okay. Let's see if she can get into it a little bit more before I just stop, because I don't care about the intro to her video.
I'm Lynette Zhang, Chief Market Analyst here at ITM Trading, a full-service physical gold and silver company. But honestly, I have been studying currency life cycles since 1987, and there is always a repeatable pattern to them. This is why it is critically important that you hold as much physical gold and silver, and why I talk about it all the time. Because it's hard to see it coming, but coming it definitely is. Fed Chair Powell is expected to announce a monetary regime shift on Thursday, and historically I'm going to encourage everybody.
Look, I'm just going to stop the video here. She basically is saying that tomorrow, Fed Chair Jerome Powell, the guy who's in charge of the Federal Reserve, is basically going to let inflation just go. They always kind of had this 2% soft target for inflation every year, which means every year it's kind of hard to see. But when you look at the price of a home today versus 10 years ago versus 40 years ago, inflation is definitely a real thing. But she's basically saying, if you watch this whole video, it's 40 minutes long. I will leave a link to the video in my video description here for you guys to watch. But she's basically saying they're going to let inflation go. Now, I know a lot of people are more onto the deflation side. They say inflation isn't going to happen. If anything, deflation is going to happen. Both are incredibly bad. But Lynette Zhang is very much a hyperinflationista. She says the Fed is going to let inflation go and not care about 2% anymore, and we're going to see hyperinflation in the years to come, the months to come. Either way, let me tell you how gold helps. If you're in a situation of hyperinflation, the price of gold will just rise. It will just flow with the inflation, because the dollar becomes weaker and weaker, the value of gold will just kind of go up, skyrocket with the inflation. So you'll actually hold, it's a very good store value for a time like that. Now, in a situation where there's deflation and the dollar becomes worth more and more and more, the banks won't let you have any. They literally will not let you take your own money out of your own account. But if you have gold, you'll have purchasing power, you'll have ways to buy things and barter. And actually silver is better for bartering too. So that's how precious metals actually hedge against either situation. I would highly recommend you check out this video and follow Lynette. Like she says, she's been doing this since 87. I was 2 years old in 87, so she knows a lot more than I do. And the reset's coming, folks, whether it's good or bad. I do believe the results of the election will really affect which way we go there. With that, let's just kind of jump into some more general news like we usually do. Bitcoin mining reaches its largest difficulty ever. Here's what it means. Before I jump into it, remember that we had another Bitcoin halving this year. The first one, or the previous one, being in 2016, and then what happened in 2017, a year later, is we had a historic bull run. So miners on the Bitcoin network are facing the highest difficulty they ever have to generate new blocks, data shows. This will always be the case every time there's a new halving, so I don't know what's so surprising about this, but network difficulty has surged to an all-time high amidst massive interest in the crypto space. However, it also means retail miners, hobbyists, and small-scale firms have to concede hash power to the larger mining corporations, at least until the next adjustment when difficulty pares down. Data from on-chain analytics firm Glassnode shows the difficulty of mining a single Bitcoin block ramped up over 3.6 today, a new all-time high for the Bitcoin network. The jump was not the biggest, however, but it brings the network to a record high of 17.56 trillion. The previous high was in July this year. Mining difficulty is adjusted every 2 weeks, and it can either surge upwards or pare back down. This is because of Bitcoin's inherent structure that keeps miners in check by checking the speed of block generation. For example, if they are being too fast or too slow. Upward adjustments means a proportional increase in the network's hashing power or the amount of available power on the Bitcoin network. So if you don't know anything about how mining works, you're learning something. On August 15th this year, Bitcoin's network hash rate crossed its earlier record high of 136 exahashes per second. It then tumbled down in the week after, apparently due to floods in China's Sichuan province, a region known to house Bitcoin miners and reportedly over 60% of the total network's hashing power. So China is mining the crap out of Bitcoin more than any other country in the world. Go figure. They're more innovative than places in the West, which is sad for us. But high hash rates don't necessarily mean well for all participants in the mining industry. High values mean more sophisticated machines conquer the network to provide the computing resources required to keep Bitcoin running. For those with smaller setups, it's a money-losing effort considering the massive electricity requirements and cooling costs. Hashing difficulty to set a new high next? BTC.com data predicts the next difficulty adjustment set for September 7th will bring yet another increase with the figure marked at over 3.5%. When that happens, it will make the new ATM for Bitcoin's network difficulty and send it past 18 trillion. Okay. Meanwhile, Bitcoin prices are increasing despite the mining difficulty. The pioneer cryptocurrency has almost tripled in value from sub 4,000 in March 2020. Was that really this year? Wow. To hovering in the 11,500, 12,000 range the past week. That can't be right. Really? That sounds more like 2019. Was Bitcoin really? I remember it did go under $4,000. I bought some, but was that this year? Let's see. Yeah, no. See, it was 2019, dude. See, get your shit together, dude. You're gonna write an article like this. In March, we were way higher than that. Sharamawa. I'll remember not to take you seriously. Okay. So yeah, Bitcoin mining difficulty is a thing. But I think the thing to take away from that article is despite how authoritarian they are, China is at least willing to get on the side of innovation. And they see, like many other countries see, that crypto isn't going anywhere. So they are controlling the monopoly of miners. You would think the US would be doing that, but they're not. At least not to our knowledge. All right, just a little bit of gold news. Gold prices weighed down by strong rise in U.S. durable goods. Stronger than expected momentum in the U.S. manufacturing sector, which is good, thank you, President, is expected to weigh on gold prices even as the market struggles to find upside traction. Wednesday, the Commerce Department said that the U.S. durable goods ordered increased by 23.2 billion, or 11.2% in July, up from June's revised 7.7% increase. The data was much better than expected. Consensus expectations compiled by various news organizations called for durable goods to increase 4.4%. Excluding transportation, new orders increased 2.4%, the government said. Core durable goods orders were much better than expected, as economists were calling for a 1.9% rise. The gold market has seen some modest selling pressure as prices traded in negative territory. December gold futures traded at $1,911.39 an ounce, down 0.63% on the day. The revisions higher in core and capital goods, along with a solid headline numbers, show a decent economic recovery, but this is much more in line than the headline would indicate, said Adam Button, chief currency strategist at Forex Live. The better-than-expected data having pushed the U.S. dollar index to its session highs, which it's taking its toll on gold prices. So, as of today, the U.S. economy and manufacturing sector is looking good, so gold goes down. Gold went down 0.63%. Silver only went down 0.43%. I am going to be honest with you. After watching Lynette Zhang's entire video yesterday, I bought another stack of Silver Eagles. They're really easy to order from a number of different websites. I use JM Bullion, but there's a number of different ones that'll ship in the U.S. pretty quickly for free. I'm definitely not just going to let all my money sit in the bank, guys. And I highly recommend you diversify your portfolios, okay? Let's just refresh the crypto market. Everything's looking down. Wow. Aave is up 15%. VeChain is slipping. I almost maybe have to go gobble up some more if that's how it's going to be. Omise Go is definitely dropping. They got it, it surged, so that doesn't surprise me. But everything else is down. Bitcoin and everything kind of dropped significantly yesterday. You can kind of see the same trends over a number of different cryptos. It doesn't look that bad though. I'm still incredibly bullish. Just remember, we need infrastructure. By the way, supposedly, the IRS is sending out another tax letter to everyone saying, like, if you hold crypto, we're going to come after you. I personally would not be intimidated by that just yet, but be prepared if you're in the United States. Anyway, that's going to do it. I think the main point of my video was the very beginning. I would highly recommend you guys check out Lynette's video in its entirety about Jay Powell's announcement tomorrow. It's not going to be like him saying, we're going to do a financial reset, okay? He's not going to say anything crazy like that. What he's probably going to say is, well, we may have to ease up on our inflation restrictions, okay? That's probably what it's going to sound like, but this will be the day, history will see it as the day when the reset started. Anyway, I trust Lynette, seriously, and have a good day.